Assalamualaikum warahmatullahi wabarakatuh to my dearest lecturer Dr. Muhammad Ariff and my fellow friends. So today our group consists of Ideeza Aina binti JUNAIDI, MUNIRAH binti SHUKRI, ALYA YASMIN binti MAZLAN, NURSALSABILA binti AHMAD FARIS and NURA'FRINA ZAKIRAH binti ABDUL HALIM. We're going to present about the issues and challenges of risk management in Takaful. In this topic, we're going to present about the introduction, the definition of Takaful and risk management, type of risk in Takaful operation and ways to manage the risk, and the issues and challenges of risk management in Takaful, and lastly is a conclusion.
Assalamualaikum warahmatullahi wabarakatuh. My name is Aina binti SHUKRI. I'm from IC11040A. Today I would like to talk about introduction. Okay, so in this introduction, we would like to talk about risk and Takaful. Basically, risk management is a strategy for managing risk in a variety of ways, including Takaful. So, what is Takaful? Takaful is a key tool applied in the Islamic finance industry to protect Ummah's life and their property. Okay, so risk management has been a major concern that practiced in Takaful, and it widely practiced in many Muslim countries across the world. So, Takaful is also practiced in a non-Muslim countries such as Malaysia, Indonesia, Brunei, and Singapore. So, in this article, we will focusing on the risk in Takaful sector. Okay, so next is a definition of Takaful. Takaful is derived from Arabic word which is kafala, which means assurance. Therefore, Takaful also means a share guarantee. Takaful in the term that literally translate as mutual guarantee or guaranteeing one another. So under Takaful, they share resource to cover event or losses that one another post member could afford on their own. So Takaful exists mainly to distribute risk and compensate for other persons' financial loss. So Takaful in Islamic counterpart of collective insurance. Unlike the traditional or conventional insurance, it is a one-way transaction and does not include tabarruk in the insurance.
Assalamualaikum warahmatullahi wabarakatuh to all my listeners, especially to my respected lecturer Dr. Ariff. My name is NURSALSABILA binti Ahmad Faris. I am from IC1105DA. My matric ID is 2019-440496. Today, I would like to present my part in the assignment that I have given to my group, which is the definition of risk management and the conclusion from the assignment topic that I have given. So let me start. So I will start with the definition of risk management first. So whenever we begin something new, such as a business or managing a firm or empire, there are risks that we must be aware of and prepare for. Risk can be found everywhere and arises immediately as a result of unpredictability. Risk management is a planned and systematic procedure intended at helping the project team discover, classify, measure, manage and control the risk at the proper moment. Furthermore, according to K. Srinivas collection of risk management definitions based on Nadim Ehsan et al. 2012, risk management in a project involves the identification of influencing factors which could have negative impact on the cost, schedule and the quality objective of the project and quantification of impact of the potential risk and implementation of mitigation measures to minimize the potential impact of risk. Next, according to Bahamid et al. 2017, thoughts about risk management is defined as organized and comprehensive method tailored towards organizing, identifying and responding to risk factors in order to achieve project goal.
Assalamualaikum warahmatullahi wabarakatuh. My name is ALYA YASMIN binti MAZLAN from class IC110A. My matric number is 2019-202872. Today I would like to present to all of you about my topic, which is risk in Takaful. Type of risk in Takaful have 5 types, which is underwriting risk, operational risk, credit risk, liquidity risk, and market risk. So first, which is underwriting risk. If a person registers for Takaful and the Takaful operator does not perform the underwriting process, then this is where the underwriting risk arises. Without such a process, it will affect tabarruk funds or risk fund. In addition, it also causes injustice to low-risk Takaful users, as they will not be able to make claims because the funds that the company collects will not be enough to cover the cost of high-risk individuals. We can note that the importance of the underwriting process so that the contribution funds imposed on the individual is accurate and under the risk assessment on the individual. So next is operational risk. Operational risks are defined as risks that occur as a result of losses incurred when a company's internal process as well as human resources, technology or external events fail. In addition, human resources that cause risk arise may be due to employee non-compliant, fraud, and not performing their responsibilities sincerely. Okay, the third one is credit risk. Credit risk occurs when one of the parties fails to perform its obligation within the stipulated time and does not follow the agreed terms. In the definition of default risk, it is the risk that occurs when the Takaful operator either does not receive directly or only receive part of the cash of assets. This happens because some parties fail to meet the condition in the contract. Okay, so next, liquidity risk. Liquidity risk is one of the abilities of a company or an entrepreneur to settle their debts without incurring losses. However, liquidity risk arises from the marketability of investment that lack illiquid assets. It is an investment that cannot be bought and cannot be sold quickly as it will incur loss. This usually happens because of movement against price on a large scale.
So the last one is market risk. According to definition of market risk, it is the risk of loss that occur from movement in market price. It also involves suku, and at the same time, market risk also deviates from the actual yield as expected by an individual or an organization. There are also several types of market risk, which is interest rate, equity risk, commodity risk, and currency risk. Interest rate risk is the risk that involves interest rate fluctuation in fixed opinion investor. Equity risk is the risk that occurs in change in the investment price of stock, while currency risk occurs in change between one currency and another. From here, it is able to influence investment that hold assets in other countries.
So that's all from me. Thank you. Let's go to the next presenter.
Assalamualaikum warahmatullahi wabarakatuh. My name is NURA'FRINA ZAKIRAH binti ABDUL HALIM from class IC 1105DB with number metric 2019216318. I will present about ways of how to manage Takaful risk. Ways of how to manage Takaful risk. All types of risk in Takaful require specific risk management strategies and need to be well managed. This is because risk management is important so that the continuity of Takaful operations can run smoothly and in control. First, underwriting risk management. Underwriting risk management is by establishing standard selection procedures that are in line with the company's objective. This good positioning strategy and underwriting process should differentiate risk, assess and price participants appropriately in accordance with Sharia requirements. Here, most Takaful operators look at several factors such as age, hobbies, gender, as well as requiring a physical examination or medical report of applicants who have serious health problems or exposed to a higher average risk. Next, the underwriter will determine the rate of tabarruk that needs to be contributed by the participants in accordance with the participant risk classification as standard, substandard or decline. For example, the Takaful Ikhlas 9 Bahad Malaysia used a computerized underwriting procedure for Takaful motor products where applicants who meet the standard requirements are automatically selected for Takaful. Instead, applicants who are rejected or alternatively will be offered with a higher contribution rate for additional risk. This is important in order to minimize the chances of inaccurate selection that can result in a reduction of Takaful funds. Second, operational risk management. Operational risk can be managed by establishing policies and developing appropriate schemes by the board of directors, Takaful operators, and management of the company. These risk factors such as people, technology, and internal processes need to be identified. The operational risk monitoring system shall ensure that both internal controls, which is information collection and reporting system, are effective. Internal and external audits is also important to obtain more accurate recording of transactions or strong internal control. Here, Takaful companies also need to ensure that an adequate level of staff is available at all times to minimize the incidence of human resource risk. The requirement and training of qualified, efficient, reliable, responsible, and capable human capital staff helps ensure effective operations. In regulation, companies also use a zero-tolerance approach for any form of regulatory violation. After that, information technology IT systems should constantly review to assess their continued effectiveness and resilience. Requirement of experts in the field of technology to develop software that can meet the specific needs of the Takaful industry is necessary. User guidelines and training documentation are fully implemented to help ensure that users understand the system they are doing correctly. In addition, both the business continuity (BCP) and the disaster recovery plan (DRP) have been established to clearly state the policy and detailed data retention procedures for recovery in the event of disaster. Third, credit risk management. In managing spread risk, migration risk, concentration risk, and default risk under credit risk, conventional insurance companies set their investment policies which set limits for credit exposure. Typically, credit exposure limits are set for insurance company investments and credit activities based on first internal and external ratings as well as stress test results can be used as measurement tools to limit insurers' credit risk exposure. Second, maturity limit credit facilities must prioritize short-term credit over than long-term credit according to the needs of the insurer. Third, limit the maximum investment amount or certain percentage of investment exposed to a single industry issuer, geographic region, or some other risk classifications. Other than that, the practice of derivatives that do not comply with Sharia because interest base has resulted in Takaful operators to having rely on internal controls to ensure that credit risk exposure are kept within the limits of prudential standards. For liquidity risk management, there are two approaches to hedging liquidity risk that also apply to the Takaful industry, namely through cash flow modeling and liquidity ratios. First, a cash flow modeling approach is implemented to assess the total deficit, surplus, or liquidation value risk to meet the needs of the Takaful industry. In this case, the Takaful operator must ensure that it has sufficient liquid assets to meet liquidity risks and unexpected cash outflows by establishing a liquidity contingency plan. Second, the liquidity ratio approach can help Takaful operators to determine the amount of liquid assets required to meet the demands of the liability portfolio. The level of liquidity ratio required will also assist in determining the investment policy of the Takaful operator. In addition, for daily liquidity management will be calculated at the end of each day based on the end of day balance by investment department. Meanwhile, the audit committee will monitor the risk of liquidity concentration, for example, by referring to the investment exposure of the large counters. Fifth, market risk management. As we know, Takaful companies are not involved in interest-based transactions because they are based on Sharia principles. However, Takaful operators face interest rate risk indirectly as they do not have their own benchmarks to determine markup price. Therefore, interest is still used as a benchmark. For example, in Malaysia, the Kelibor Kuala Lumpur Interbank Offered Rate is used by Islamic financial institutions to determine the markup in their financial activities. After that, there is a bilateral joint adjustment approach to reduce interest rate risk and cooperative hedging instruments to reduce currency risk as Sharia-compliant risk management instruments. Next, to reduce equity risk and commodity price risk, Takaful operator will use the value at risk VAR method as one of the stress tests of risk management instruments that can be used to assess portfolio exposure and vulnerability to market conditions as well as abnormal shocks, which is that the probability of portfolio loss exceeds some specified part.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ideeza BINTI JUNAIDI and I'm from IC105TA. Welcome to continue the presentation regarding the topic Issues and Challenges of Risk Management in Takaful. In this part, I will discuss about 4 issues, which is internal control, corporate governance, Sharia-based challenges, and Islamic financial market. Now let's move on to the first issues, which is internal control. So what is internal control? Internal controls are mechanisms, rules, and procedures which implemented by company to ensure the financial integrity, counter information, to promote accountability, and to prevent fraud. And basically, in a company, they will comply with the laws and regulations to prevent them from stealing any assets or committing fraud. But the internal control will help them to improve the efficiency of a company by improving the accuracy and timeliness of financial reporting. So, if a company practice and apply the effective of sufficient internal controls, it will help them to prevent any problems or risks which might occur early. And by this, it will prevent them from face any systemic problem associated with the risk management. So as we know, Takaful or conventional insurance have their own risk, right? They will expose to risk. So in order to prevent the risk from getting bigger or hard to handle, we must apply a good and efficient internal controls in our company. Okay, by this, it shows that applying a good and sufficient internal controls is very important in a company, especially in a financing institution, because in financing, we will expose more risk, right? Okay, either conventional insurance or Takaful insurance, but Takaful insurance might have more risk compared to conventional, because in Takaful we must comply with the Sharia, so we will expose to the Sharia risk also. In order to reduce the risk, we must apply a good internal controls. So the Takaful company must ensure that they apply the most effective internal controls, such as all the legislative requirements are controlled by system are all compliant with the control of the Sharia. Thus, it will emphasize the importance of regular Sharia audit as part of the comprehensive internal control system. Even though the Takaful company must apply a good internal controls, but in order to achieve that, the Takaful company must also comply with the Sharia. It is a command from Allah, right? So in order to have a blessing in everything. Next issues is corporate governance. So corporate governance is a system of procedures, regulations, laws that govern how a company is managed, administered, and controlled, which involve the interaction between the several stakeholders involved as well as the purpose of the company. So corporate governance is very important, especially for the investor, since they will show a company's direction and business integrity. And a good corporate governance will help the companies to build trust with the investors and also the community. So as a result, corporate governance will help promote the financial viability by creating a long-term investment opportunity for market participants. So it means that a corporate governance will represent the company. So in order to have a good image of a company, we need a group of corporate governance, because the investor, the community, and the society will look at them. So in this case, it refers to the board of directors of a company, okay, especially in Takaful. So in Takaful, we have a board of directors, also in any Islamic institution. So in order to have a good corporate governance, one of the requirements is the board of directors must have an expertise and potential, because they will perform partially towards all the stakeholders. Yes, it's very important, because these board of directors or corporate governance, they will deal with the stakeholders, they will deal with the investor and also the community, and all of these people will look at them. So that's why an expertise, the potential of corporate governance or board of directors is needed in a company, especially Takaful. So they need to show a good image, they need to show a good skills on how they will deal with these people. And Takaful also need to regulate and overseen by Sharia supervisory boards and authorities. Yes, of course, in every Islamic institution, we must comply with the Sharia. The same goes with the corporate governance. So any board of directors in every Islamic institution, they need to be overseen by the Sharia to make sure that these people in corporate governance or board of directors, they will make any decision or deal any activity which comply with the Sharia. Alright, next issues is Sharia-based challenges. So in this part, it refers to the Sharia compliance, okay? So as you know, Sharia compliance has restricted some elements such as free from riba, free from gharar, free from ihtikar in any activity related to finance to distinguish it from the conventional system. Okay, so for conventional system, they did not restrict any element, they apply riba, they apply gharar in their management. But however, most of the risk management strategies in Islamic financial organizations did not apply due to the Sharia requirements. So it means that these Islamic financial organizations, they apply the Sharia, they comply with the Sharia, but they do not follow all the Sharia requirements. Maybe if they want to gain high profit, they need to take a little bit riba from the insurer or from the participants because they want to compete with the conventional insurance, right? Such as Takaful, income, conventional insurance. Conventional insurance is far more advanced compared to the Takaful. So in order to compete, so the Takaful industry must take a little bit riba which do not comply with the Sharia. So in Takaful industry, risk management is very important, and the Takaful lending system provides a way to handle this risk while adhering to Sharia standards. Yes, of course. Takaful and conventional is different, okay? They are the same field, but Takaful, they need to comply with the Sharia. They need to handle the risk management just like the conventional insurance, but they also need to comply with the Sharia, which they will expose to the Sharia risk. So that's different. So Takaful industries have their own way on how they will manage their risk management. So however, according to Rosni Hassan and Syed Ahmad Salman 2021 in their previous case study about the Takaful and conventional insurance, show that 100% of the respondents admit that Sharia-based Takaful industry is still innovative and has restricted some instruments that useful as has been applied in conventional insurance. So it means that this is when they don't know how the Takaful company actually works. So Takaful and conventional insurance is in the same field. They all the insurer or the participants will pay some amount of money, and if anything happen, they will help the participants, okay, such as if any accidents or any bad thing that happen to the participants. So the company, the Takaful or any company, insurance company will help these participants. But Takaful company, they apply a different concept with the conventional insurance, okay? They apply the concept of donation, which means when participant will give their some amount of money by month, okay, and then if anything happen, they will help the participants. But if anything did not happen to the participants, but the money that they had paid will be given to the people who need it, okay? So that's how the donation works. Means that we give something and then we give something and we get back. We get back means we get a rewards from Allah by helping other people. So that's how the Takaful actually works, okay? But in this previous case, they show that Takaful has restricted some instruments, okay? But the conventional insurance did not restrict it. Yes, of course, conventional insurance, they do not tie with any elements that they need to adhere, okay? Not like Takaful. Takaful, they need to adhere with the Sharia compliance, but conventional insurance did not adhere any Sharia compliance or any elements they need to follow. So that's why instrument in Takaful is different from the conventional. Okay, so Takaful, they do not apply or innovate any instruments in Takaful because maybe that instrument have gharar, uncertainty, maybe the instrument have a little bit of riba, so that is prohibited in Sharia. So as a Muslim, we must follow the Allah's command. So in this case, the Takaful industry must try to investigate the aspect of Sharia in the Takaful industry that needed to be spread among Muslims and try to handle the risk management strategies with value creation. It means that most of the people or most of the Muslim people do not know how Takaful works, right? Because conventional insurance come early compared to the Takaful, and not all the Muslim people know about the Takaful. They think that conventional insurance is much more better and much more profitable compared to the Takaful. So that's why they participate in conventional insurance compared to the Takaful. So that's why this Takaful industry, they need to spread this awareness about the Sharia base which they apply in Takaful, so that the Muslim people will know about this concept of donation which apply in Takaful. And also the Takaful industry need to have a good strategies in handling the risk management when it comes to the Sharia-based challenges. The last issue is Islamic financial market. So as we know, the existence of Islamic financial market has allowed the Takaful industry to compete with the conventional insurance. Even though the conventional insurance is far advanced compared to the Takaful, but we still grow a steady pace. So the development of Islamic financial system has accelerated the growth and expansion of the Takaful sector, as this industry will improve the application of Sharia compliant legislation in terms of protecting consumer from risk and vulnerability originating from unforeseen circumstances. So it means that Islamic financial market help the Takaful industry to grow and improve the management, and also it also will improve the application of Sharia compliance, which means Sharia compliance is actually will benefit for both sides, either for the company itself and also for the insurer or participants, because we apply the concept of donation right, which means it will protecting the consumer from any risk, any uncertainty events. However, there is still lack in awareness among Muslim itself toward the risk management provided by the Takaful, which is better than the conventional insurance. It means that we need to spread the awareness among Muslim regarding how all these financial institution actually works. So Islamic financial institution must act quickly to develop an infrastructure for adopting effective risk measures, controls and management, as well as creative tools for sharing, transferring and mitigating financial risk. So it means that all the Islamic financial institutions, in this case we refer to the Takaful, they need to improve their management on how they manage their risk, and they also need to spread the awareness of Takaful among all the people, especially for the Muslim people, so that these Muslim people know that how the Takaful actually works. Okay, because people want profit, everybody want profit, so they tend to choose any company that give them a higher profit if they do not know the reason why the Takaful exists. If these Muslim people know that the Takaful apply the concept of donation, they will join and participate in Takaful compared to the conventional insurance, because if they know that conventional insurance have a lot of riba, have a lot of uncertainty, they will not participate in them. So that's how the importance of knowledge among Muslims, especially in Takaful, because it will help them and it will benefit them if they choose the right. The importance here is how we choose the company which will benefit to us and also to the company. So I think that's all for me. Thank you and Assalamualaikum warahmatullahi wabarakatuh.
So finally, the conclusion of this topic. Inadequate risk management can result in losses on assets of investment, mispricing of insurance policies, insolvencies among the reinsurers, market misconduct of insurance agent, and non-compliance with insurance regulations. The risk management efficiency of the life insurers and Takaful operators is the main concern of shareholders, policyholders and regulators. This is because the prudent risk management can guarantee the favorable return to the shareholders, guarantee the ability to compensate the policyholders as the covered losses should be occurred, and finally assured the solvency requirement by the regulators. So that's all for me. Thank you so much for listening. Assalamualaikum.